Whether you are a seasoned investor or you're a first-time home buyer who's looking to buy a house, there are many opportunities in today's real estate market. This video actually came from one of my subscribers who was like, Malcolm, I want to buy, but I need help. I need you to give me some advice. If you guys didn't know, hi, my name is Malcolm Marcelle, and I'm a licensed mortgage loan officer, MLS number 1830011. And I help blue-collar workers get approved for a mortgage instead of getting denied. If you have never got denied for anything, it is horrible. It's a gut-wrenching feeling, like when you really try your best and it's just like, no. And even worse is when you go and they say, oh, don't worry, we'll email you or we'll send you a letter on why you got denied. Like you're waiting in the mail for them to give you a letter that's just like, no. And guess what? Sometimes they don't even send it or send you an email. I don't want that to happen to you. So if you are going through that or went through that, or you know someone who might be going through that, give them my information. My team and I will help you. Whether you're looking to move in 90 days or 9 days, either way, you could call, fax, email us, send us a letter. We'll actually respond. But we're here to help you so you don't have to go through what I went through personally. And that's why I got into this business. All right, jumping straight into it. Number one reason. This is going to cause a lot of controversy. Some of my peers might like this. If you're looking to buy, you might be a little confused about it. But historically, we have the lowest interest rates than we've had in decades. Now, I know what you're thinking, oh my God, the fearmongers are like, oh no, what are you talking about, Malcolm? Rates are high. I've been watching the news. Still lower than what it used to be. At one point, rates were 19, 18%. Right here, those were the rates. If you look at in the last 30 years, the historical rates, the data, it's not me speaking, this is data information that you can Google yourself if you don't believe me, or Rafa, you can just put it here. They were much higher. So now we're going down with low rates. We just had a new president take office, and he even stated that he was going to lower the rates even more. So that's going to do two major things. If you've already got pre-approved and haven't bought yet, it's going to increase your purchase power. What does that mean? That means because the interest rate went down, the amount of house you can afford, the loan that you can get for your house is going to increase exponentially, because the lower the rate is, the more money that the bank will be willing to give you with a lower interest rate. Now, second thing, if you listen to my advice and bought before all of this happened, before the rates hit lower, like the president said, which he's going to lower it, rates right now about a 6.5, and in between there, he's going to lower it even more. Now, the next thing that's going to happen is all the people on the sideline, right, are going to jump in. So it's going to create a frenzy. So hopefully you listen to my advice and bought before that. But if you didn't, it's okay. You can still go out. You just know that it's going to be a seller's market and you're going to have to deal with bidding higher or dealing with higher properties. Next thing that's going to happen, if you bought before this happened, you will be in a perfect opportunity and a perfect time to do what's called a refi. You can refi on the house that you just bought and get a lower interest rate. So you already have the house. Your market value of the house or the property's value is going to go up because it's a seller's market. So more people are willing to pay higher for that. So that appreciation factor is going to happen. And on top of that, you can refi and lower your rate, because once you buy that house, especially if you do a 30-year fixed rate, your mortgage isn't going to change. The only difference is when taxes go up or if your insurance goes up. But as far as the payments, they will go down because your interest rate is fixed. So if you get a lower interest rate, guess what? Your payment goes down. As simple as that. So that's another opportunity that you're going to have. And I hope you listen to me. But like I said, if you didn't, don't worry. I'm here to get you approved. 2025, we're approving everybody. Just make sure you hit the message. Put it in the comments. Let me know. DM me, email me, fax me, whatever your way. Now, another good thing, part number 2. The secondary market is going to change. What do you mean by that? So when COVID happened, everyone was in New York. Before COVID, everyone was in New York. As COVID hit, people realized they wanted more rooms. So what did that create? That created a new secondary market where it led new opportunities. What kind of opportunities? If you had a business, for example, if you were a mover, you had new business because people wanted to move out to the suburbs, move out to Long Island, move out to get a place where they had more space. This is creating new opportunities. Now, if you bought a property out there, right, guess what? The property value went up because more people were interested in buying your property. So the property is worth more. This is creating new opportunities. And this happens a lot. When there's a major city, the suburbs, the areas around it, always have a trickle effect, and they start increasing as the population moves into more areas. Number 3, a growing rental market. Because everyone's in one area, the rents have to keep going up to sustain it. It's too many people, not enough properties. That creates demand. The more demand there is, with less supply, the more money you could create. These are all opportunities. So if you were looking to get into a rental, it's a perfect time because people are short. There's a shortage of places for people to stay. This is one of the reasons why I keep telling you guys, real estate is one of the best investments, because once you get into real estate, you own something physical. Especially if it's in one of the epicenters or one of the major metropolitan cities, there's always going to be someone who wants to rent there, increasing your rental income. This is a hack. I actually gave this advice to one of my friends retiring, and I was like, the best way to fight off inflation is to own real estate, because once you own real estate, you can always increase the rental income that you're getting from your tenants to offset the inflation that your pension isn't going to give you.
Another one.
Oh my God! Wow!
Boom, boom, boom. This is how you create long-lasting wealth through real estate. I'm telling you guys, you can control how much money you get. You can control the income you generate, because now you can see, okay, my rental income is going to be this. This is how much I'm making. If I get 6 more, 7 more tenants, this is how much I'll be making. Let me get 10 more so I have a little buffer in case some people don't pay. I have to cover back. But the math is always mathing when it comes to real estate. It's one of the best things because you can plan the income versus like stocks and something. Yes, I love my stocks, but you can't always control the dividends. You hope that it comes if the company does good. 9 out of 10 times it's going to go up. It's going to move up, but there's a limit factor how much you control. And it takes a lot more capital, a lot more investment to put down for it to happen, versus when you're doing rental income. Remember, you're not putting down all this money. That's goes into my fourth reason, finance options. The financial options that you have to get real estate is way, way more better.
Are you stupid or something?
Way more better. That's not even a rule. It's so much more lucrative, because you try to take out a loan to tell them, hey, I want to invest in a stock. They're going to look at you like you're crazy. What? You're taking my money, my hard-earned money from the bank to invest in a stock? No, no, no. That's not physical assets.
Easy for Gazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's
But if you tell them, hey, I only want to put down 3.5 and I plan on buying a multifamily that's worth $1 million, the bank's like, yeah, no problem. How much income do you make? Oh yeah, you're getting rental income? Yeah, we'll give you the money. No problem. Don't even worry about it. Do you see the difference? Those finance options don't come when you're buying stocks, or even you can get a loan when you're trying to buy a business, but it's not as easy. So the bank is willing to loan more because you have something physical that they're willing to back, because they know that, hey, based off the data, 1, it's going to go up, it's going to increase. 2, based off the data, I know my money's safe, and if in case you default, the bank doesn't like doing it, but I know I can take that property and it's worth this much. I can recoup this much money back, so I'm fine with letting you loan the money. The same reason why hard money lenders are willing to lend on real estate. It's always showing you that real estate is one of the best income sources and ways to increase your wealth. And I hate using this word because now I feel like it's too commercialized, but it's one of the best ways to create generational wealth, and it's true. You create it through real estate. All right. Number 5, they have, especially now in 2025, it's more supportive for first-time home buyers. I don't remember a last time where I've been seeing so many new grants pop up. I don't remember, like even 2020, there was 1 or 2, nothing really special, but now there are new grants coming for first-time home buyers, specifically for first-time home buyers. Fannie Mae just created one with Home Ready that is actually states in the grant that we will give it to a first-time home buyer, but the other people on the mortgage doesn't have to be a first-time home buyer. Like, you don't see loans like that. Usually when they're giving you a grant, they want everyone to be a first-time home buyer. They're like, hey, as long as there's one first-time home buyer, we'll still give you this money. I'm actually put in the comment section if you guys want me to do a part 2 where I'll do a video talking about this new grant that I don't see a lot of people actually talking about, which surprises me, because you could get up to $5,000 free, and then some lenders are actually giving you an extra $2,500. So in total, you could get $7,500 of free money towards a home. And they're doing it as a pilot program, meaning that it might not last long or might not be here long, but they're using it as an initiative to get it out. And guess what? New York City is one of the major cities on the list. Boom. New York City, Connecticut, New Jersey. So the tri-state area is actually on it. And I was like shocked when I saw this because, like I said, there's not a lot of grants for first-time home buyers, or at least good ones that I usually like. This is one of them. Shocked the mess out of me. So that being said, I'm telling you, 2025 is your year to become a homeowner. Put in the comment section if you want me to talk about the grant. Do part 2 about the grant. Say something about the grant. Just blow up my comment sections. Let me know. Blow up the views. Share this with a friend of a friend. And I promise you, I'll do a part 2 and I'll talk about just about the grant. Like the whole video is going to be about the grant, telling you the requirements and everything I know. And because it's a new grant, I don't have all the information, but I have enough where I can help you, and I'm willing to work with you. I can't wait for my first client to be done with this grant, and then we could record it, do a video about it, and you could explain to people like, yo, Malcolm, help me with the grant. I think it'll be a dope video, so I'm excited to work with you. 2025 is going to be a year. 2025, we're approving all loans. We're going to work through it. We're going to fix your credit. We're going to help you with your debt. We're going to come up with a debt plan. We're going to be outside networking. We're going to find you the realtor. We're going to find you the attorney. Like, I have a team of people and I want to be there to help you. I can't wait. I got so many new things in store for you guys. We have new books coming out. We have new networking events, especially if you're a blue collar worker. It's going to be stuff that you can put your information in and you could come out, meet me in person, shake my hand like, oh, I met you for YouTube. Now I see you a real person. You're going to come out to these networking events. I'm here to help you guys. I'm here to get you approved. I'm ecstatic. I'm excited to help you. I cannot wait to see the growth in you. And I hope you are ready for this new energy. 2025 is our year. 2025, we're getting approved with Mr. Marcelle. That's the slogan. 2025, approved with Mr. Marcelle. That's what we're talking about. I only want to see approvals. I want to see you happy. I want to see you create generational wealth. And I want to see you succeed. If no one else told you, you are amazing. I am rooting for you. And do not forget, once you own it, it is for you and for you to pass down. All right? Over and out. I hope you're excited. I hope you feel the energy.